I'm Jack from Options Insight, and welcome to Trading 101. So in our Crypto Insight videos, we discuss the news that drives Bitcoin, as well as analyze the option flows and how these impact the crypto assets. So what is Bitcoin and why was it created?
In this video, I'll be taking a look at the following questions. What is Bitcoin? How does it work? And why was it created? Okay, so what is Bitcoin? Bitcoin was the first digital currency created in January 2009, and it was developed during the height of the financial crisis. With Bitcoin being the first cryptocurrency, it's important that I break down where the term crypto actually comes from, as this plays a crucial part in how all of this actually works. So then, crypto is short for cryptography, which is basically the process of turning data into a super secure format through the methods of encryption. I'll draw back on this point later in the video as I explain how this Bitcoin network actually functions. The creator or creators of Bitcoin remain anonymous, but go by the name of Satoshi Nakamoto, who stated in their white paper, which is a detailed document outlining each and every aspect of the currency, that this was a completely new peer-to-peer digital monetary system which is completely decentralized, meaning that no government or person has more authority than anyone else. So now you might be wondering, how does this actually work? As Bitcoin is a peer-to-peer network system, it relies on users interacting with each other in order to make transactions whilst being excluded from the control of governments and banks. These peer-to-peer transactions are held on computers around the world which can be created by anyone. These types of setups, otherwise known as nodes, validate each transaction before they are added to the blockchain, which removes the reliance on a central source of trust. Unlike paper or fiat currencies, where governments can print more money and increase the supply and circulation, the process of creating more Bitcoin is through something called mining, where miners have to try and solve extremely complex digital math problems and receive Bitcoin rewards. The value of these rewards is ultimately what incentivizes more people to mine and strengthens the network, as the number of Bitcoins that can ever be mined is capped at 21 million. The process of mining is very computationally intensive and requires a lot of energy, which has been cited as one of the negative impacts of Bitcoin. In my upcoming video called The Environmental Case Against Bitcoin, I will critique this argument and show that Bitcoin may actually be the driver of positive change regarding alternative energy sources. The concept of Bitcoin then. Another critique of Bitcoin is that it's not tangible and you can't hold it in your hand like gold. However, the concept of Bitcoin as this intangible store of value is a concept that's been seen before in the 1800s in the Micronesian islands, in the form of rhinestone discs, which were considered extremely valuable. The stones were so huge that given their size, weight, and fragility, they were not typically moved after being placed in a specific location. Instead, if a rye were gifted or exchanged, the new owner of a disc didn't have to be able to physically touch or see it. Now, that might make them sound pretty useless as a form of money, but the local community maintained an oral ledger which effectively kept track of who owned which chunks of rye stones, thus deeming the rye stones a store of value. In the case of Bitcoin, this ledger that records who owns what is digital and validated by the miners who operate the nodes on the network. So why was Bitcoin actually created then? Bitcoin has the potential to truly revolutionize the economic structure of today's society. People's trust in global central banks and other institutions has dwindled due to excessive and irresponsible debt accumulation, as well as reckless money printing, leading to asset price inflation and increased wealth inequality. The 2008 financial crisis, which led to bank failures and taxpayer-funded bailouts, was due to the misaligned incentives that governments gave to banks and corporations to take excessive risks, knowing that if all went wrong, they would be rescued, whilst everyday people would lose their homes and livelihoods. Rather than to trust these government bodies, Bitcoin has created a kind of trust machine, where rather than trusting a centralized government body, the users can trust a network of global participants who are incentivized to preserve the integrity of the system together. This type of system is less fragile and not reliant on any one single authority, making it more robust and resilient than the traditional financial system. An example of this resilience was when Bitcoin mining was banned in China in 2021, and the hash rate dropped by 50%, which is the measurement for the amount of energy that is being used for mining, which ultimately dictates the health of the network. Whilst this crashed the market initially, miners were able to relocate and the network's health healed over time without the need for any bailouts or assistance. The ability to transact in a peer-to-peer system without the need for any intermediary is game-changing for many of the global population who don't actually have access to regular financial services due to their location or socio-economic status. Crypto adoption is soaring, with over 300 million crypto users worldwide, with Asia, Africa, and South America being at the forefront of this movement. Also, in countries like Argentina and Turkey, the adoption of Bitcoin has exploded due to the rampant inflation they have experienced in recent times. The ability to preserve purchasing power by quickly moving into a global digital currency has protected many from losing all their wealth, as government actions have thrown many citizens into poverty. Watch my inflation video where I go into more detail about what inflation means and why it matters. Thank you for watching this video about Bitcoin. I hope you enjoyed and learned something from this. Please don't forget to subscribe and like. Also, please comment with any questions or feedback and what other topics you'd like me to cover next. I'm Jack, and this has been Trading 101.